the dark market. I can't wear this bandana, it's too small for my head, but it would fit Professor Meatball right over there. If you guys want to watch this video about the OTC, as well as expanding your mind about what former Citadel employees spitting truth about the dark pool activity over on CNN Money, well, we're going to cover all of that right now. So we have former Citadel employee speaking truth about dark pool activity. I'm not sure why I censored spitting, but he is spitting some truth as well, followed up right after about what dark pool activity is. OTC, off exchange conspiracy, the last DD you'll ever need to read. Here we go. Let's strap in. Make sure that you have started to hover your finger over that like button and then click it. We're trying to get 800 likes on this video. If it's not quite there yet, comment out which like you are and let's get started. First of all, with this video, we're gonna stop it in between a couple times, but it's a 4-minute long video. It needs your attention and we're gonna get started right now.
Best bidder offer.
By law, Citadel must match the best bidder offer in a public exchange, but about a third of equity trades take place outside of public exchanges. Citadel doesn't have to match those.
So while the retail trader will get the best price in the market, there's nothing to show that that is an accurate price.
David Lauer worked at Citadel, where he was laid off in 2009. And then
first line, never lay off this person. He's gonna come back and whistleblow. He just mentioned that when these market makers give you a price, it might be the best possible price, but it's not an accurate reflection of the value of the stock. Let's imagine this, right? We have a company that just, holds money, and that's their entire valuation. That's an easy way to evaluate a company. Then if this company has $100,000 of money in it, it should be worth $100,000. And yet that's still not how most markets work. We can't just consider how much liquidity, how many assets, and how many liabilities are on a balance sheet. That's fundamental analysis for sure, but pattern analysis is starting to become king, and so has data. That's the reason why we end up having to guess what the value of each stock is. This is just fundamental, like how the stock market works. However, now what's being enlightened is that not only are you having to guess what the best price is, whenever you get that best price by a market maker, it's not necessarily even the correct one because of off-exchange activity, because of dark pool activity. Let's find out a little bit more.
Worked at other trading firms before deciding the practices were flawed. He has testified before Congress on the dangers of high-speed trading.
The market exists for two reasons. The first reason is price discovery, and the second is capital formation. That's it. The market is not there to be a casino for math geniuses. The price discovery mechanism breaks down when too much of the incoming orders are executed outside of the normal exchange system. And there have been several studies that have demonstrated that at the 40% mark, it acts as a disincentive for people to post orders on the marketplace.
Ooh, okay. So there are actual milestones, actual cutoffs, where the people are incentivized to use or not use the off-exchange, the OTC, the dark pools. Something that you guys should understand is that there are ATS and non-ATS versions of the off-exchange, which is a opportunity for smaller companies to be able to be traded off the main exchanges, off the New York Stock Exchange, for example. However, larger companies can still be traded on that even if they don't need the platform. So GME and AMC could be started to be traded on off exchanges, and there are actual incentives for deciding when to use these regular exchanges like the NYSE and the off exchanges here, which Mr. Hedge Fund is trying to enlighten us with.
We are right at the 40% threshold now for volume that is happening off exchange.
I can say to my customers, you're getting the best available bidder price out there. But if there's someone that's willing to pay more and they're not telling us and they're not posting on an exchange, that's just how the market works.
Part of that is
that's just how the market works.
Arrangements that retailers have with wholesalers. Market makers stop posting orders on the lit market. Other countries have recognized this problem, Canada especially. Recently, they passed what's called the Trade At Rule, which imposes a burden if you're going to execute off exchange. And that has driven dark volume down to around 2 to 3% of the Canadian markets. Now, some will argue that's a bit extreme, and it might be, but 40% is another extreme. And we are doing more harm than good when we're at that level.
So one of the thoughts that you have to have right now is that when you are on a perfectly fair marketplace where there's supply and demand, that is just how democracy works. It is you betting or voting with your money on trying to buy a stock or sell a stock at a certain price. However, if someone else is just streaming on the off exchange because Citadel decided to take their order and then execute it on the off exchange, suddenly that's a completely different market. And now we're no longer guaranteeing the best price simply because of the opportunity gap between the person that wanted to sell at a certain price but didn't get their order executed on real exchanges. They got their order executed on the off exchange.
The major exchanges over the last 10 or 15 years have lost a lot of market share. 80% of all New York Stock Exchange stocks used to be traded on the New York Stock Exchange floor. Now that number is 11%. Unfortunately, the exchanges are reacting to loss of market share by trying to get the regulators to protect their business model. We're not very supportive of that.
Citadel also argues they are bringing high-speed trading technology to the masses.
I think the automation of the markets has resulted in a much better outcome for average, everyday retail investors. We have state-of-the-art technology and infrastructure and one of the fastest trading systems around. Any retail client order that gets executed through us is trading on a level playing field with the best high-frequency traders out there.
You can reap some of the benefits of high-speed trading systems, but it's a very questionable claim. As soon as you've looked at something and clicked, or typed in something and clicked, the benefits don't accrue to you because you've already taken hundreds of milliseconds to take an action.
Yeah, that's rough. And we've covered exactly, when Austin Tobit was on the show, exactly where the 87 crash came from. These program traders, of which the high frequency trading algorithms have been spawned. One of the first thoughts that you should have is, well, if I can't trust people like me to play around this princess dilemma that we call trying to execute the mother of all short squeezes, then when it comes down to a bot that can see my reaction and then hedge against me almost immediately, can we actually trust that high-frequency trading algorithms are going to be playing this game fairly? No. Then in that sense, what can we actually believe in the system that allows for humans who have a disadvantage to be able to trade, especially humans that don't have the large research corporations that are behind them, like these larger financial institutions like hedge funds do? How can we fight against robots and the powers that be?
And that's just an eternity in the world of high-frequency trading. When I was sitting on a high-frequency trading desk, and the guy next to me had a PhD in bioinformatics, the guy on the other side had a PhD in climate science from Harvard, the guy behind me designed semiconductors for Intel, and another guy had a master's in math from MIT. And these guys are all working on an HFT desk. You could have had someone looking for a cure for cancer, someone helping address the issues of global warming, another one leading advances in semiconductor design and technology, and yet here they are trying to find their fortune on Wall Street.
And that's one of the other. Let's go back to his face like this. That's one of the other criticisms, mainly of the young professional world that we're in. You don't even have to be young. You have an advanced degree and you're incentivized to come out and make these charts pretty for rich people that are not going to be, as appreciative, or at the very least as internalizing the positive work that you could have been doing for the reality that we live in. That's a different issue entirely, but let's answer the question that Movie Mang 80 has, which is, what does this video mean for us and the mother of all short squeezes? Well, like I promised, let's cover this, probably the last CD that you'll ever have to read, the OTC conspiracy, shining some light into the dark pool data. Make sure that you slam that up a vote for user NayBoyer2, and we're going to speed through this because it is quite a doozy with the sheer amount of data that we have here. What they're presenting is 100% based on publicly available published FINRA OTC data. Remember when we, with the help of a tweeter called James, someone on Twitter was able to connect us with the FINRA OTC data that was publicly available. We did it ourselves, and now someone, Mr. User NayBoyer2, is going to be able to bring us through it. To summarize, like many of my fellow apes, I'm trying to understand the FINRA ADF nonsense and why a majority of the daily volume is being routed there. Once again, we explained that there are two different markets. Well, generally, let's delineate. There are multiple different kind of markets, but two main markets that you should be aware of: the off exchange and the actual exchanges that you trade on. All of that buying pressure has almost no effect on increasing the price. So they went to some digging. And table number 1, we have monthly GME OTC activity. Right from September, we had 110,000 shares that grew all the way to 500,000 in January, and now in February data we have 300,000. So we are just imagine what we have in March. The number of shares that are traded in OTC increased 4.75 from December 2020 to January 2021. Right. So there is a big influx in being able to use this essentially cheat code to be able to not affect the price in the direction that you don't want the price to be affected on. Table number 2, weekly GME OTC activity. So we have bi-weekly, we have a number of shares from the beginning. Oh, this chart is read backwards. So from from September 2020 all the way to March 15th, 2021, right? And as of the week of February 2022, that was one of the larger volume shares that we've had, 120 million shares there. Figure number 1, total weekly GME shares traded OTC. All this data is available in that link down below in the description, so go check out for yourself. So back in September, October, November, there were less. Now there are more. Essentially, that's all you need to remember. There is a lot more to be trading, and specifically for GME, which once again, we were able to find together with publicly available data from FINRA. So if you guys are looking at the way that the price action was in January and how naturally GME wanted to trend upward to the infinity squeeze and how the off exchange plays in correlation to that, that is the connection that we're trying to play here, right? The week of 111, we had 600% of GME flow was traded off exchange. Over on 119, 700%, 800% on 125, 400% on the 1st of February, and then 500% on the 22nd of February. I have more data from February. You guys can track this data through, but mainly it's just to give you guys a sense of just how much more volume there has been on off exchange. If you guys wanted to be able to learn a little bit more off exchange, just search Andrew Mo, OTC off exchange, and you'll be able to see a video that we made a couple of weeks ago about the off exchange, but too long didn't read. Here's a different way to look at the OTC GME data. It should be abundantly clear that what is going on in the OTC dark pools is extremely abnormal. Citadel and Virtue market makers seem to be doing a lot of OTC trading. How do they get hundreds of millions of shares? What about 2 Sigma? Why are the same entities trading so much volume so frequently in the OTC marketplace? Why did the number of shares trade decrease so drastically beginning January 25th? Winter is coming. Are any of them wearing any clothes? Which is asking the question, are these shorts properly covered, or are they just naked, counterfeit? If you guys like that video, right, I'm going to do a quick outro. Thank you so much for the Moon Platoon Grillionaire and Meatball the Space Legend tiers. Thanks for Professor Meatball for wearing his snazzy tie. If you did want to join, just go ahead and make sure to press that join button down below, or press that Patreon link down below as well, and we will see all of you in the money. I'm gonna wear this bandana for this skit. The dark market.